Hi and good morning to the latest instalment of Talking Ball. It's the 24th of March. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate.
How you doing?
Yeah, not too bad, thank you.
Good stuff. Okay, let's get stuck into the latest headlines then. So oil prices are at a two-week high ahead of some key summits. There's further evidence that Russian forces overall are still unable to make headway in Ukraine, with some Ukrainian counterattacks taking place. The concerns that Russia will take time to rebuild forces with a siege mentality and increase attacks on civilians in the meantime, with fears over prolonged conflict. The NATO summit will be very important during today's session, with pressure for increased military support for Ukraine. There will also be further sanctions on Russia from the US, increasing concerns that Russia will look to retaliate and disrupt energy supplies. In terms of what's going on with the Federal Reserve in the US, again, we've seen more calls for a 50 basis point move at some point this year. Longer term US bond yields continue to decline have declined marginally on expectations of weaker growth and lower inflation in late 2022, but the short-term rates have still increased further. Japanese yen still at 6-year lows, and the central bank there are wary over the sharp losses. So continue to keep an eye on that. Higher energy prices sapped support for the Japanese currency, and the Bank of Japan remains committed to keeping bond yields close to zero. Sterling's been overall quite unimpressed by Rishi Sunak's measures yesterday. The Chancellor announced a cut to UK fuel duties and increased national insurance thresholds, but the new economic forecast tended to grab the market attention. The OBR downgraded the 2022 outlook substantially, with GDP seen increasing 3.8% this year compared with 6% previously. So quite a sharp drop there. In terms of what's going on with in focus, there were strong expectations that they will leave interest rates on hold at minus 0.75%, and that indeed was the case. That was at 8:30 this morning. So there is some choppy trade in some of the Swiss franc currencies this morning, which we'll come on to in a moment. Okay, so Steve, let's get stuck into some charts. Obviously, oil is still very much being talked about. Is that where we're starting today? You need to share your screen for us if you can.
No, I refuse to share my screen because I'm trying to work out what I did yesterday. I've gone on Bitcoin and I look like, did I buy Bitcoin? I'm like,
No, you didn't.
Damn, that looks all right. Oh no, gold hasn't done well, is it?
No.
Let's start with Bitcoin. Maintaining this sort of like its normal popularity, and it's approaching some resistance level, this downward trending resistance. Quite interesting. I think we could sort of like find definitely some interested parties looking to take a little bit of profit there. Ethereum actually breaking above the 3,000 level. It's a price we haven't seen since the start of March, so looking pretty positive on Ethereum. So yeah, just a question of really whether we're going to get sellers coming at these levels like we have done it previously. On the commodity side of things, as Joe mentioned, oil has pushed higher, although yesterday's candle doesn't look so pretty. A handyman candle, and we've got the same sort of price action this morning. We opened, moved aggressively lower, so we're testing the resilience of the buyers, and the buyers are winning currently, but unless we can push above the 115.75 level in WTI crude oil, then we might be a little bit under pressure. You can see this is like an small impulsive move higher. Normally that's followed by a correction. So there is a little bit of a sign there that maybe we could have a little bit of an opportunity to turn around. We drew this band of resistance from previously, from previous highs, swing lows, breaking support, and then becoming resistant. And so we're testing that level now. And as I say, if we push above 116, then I think we've got more opportunity on the upside. But if we don't, then a break of maybe 112 would put us under pressure. Over the last couple of hours, it's performing pretty well. So on the upside for that. This is the breakout of the triangle formation that we talked about, but we have stalled around about this 1950 level. If I'd have done my trades the other way round over the last few days, then I would have done okay in this. It's all about the timing. We did stall again at 1948, so for me that's the level of resistance in gold that's really key at the moment. You can see this bearish bearish Ichimoku cloud cover here that we have on the 4-hour chart. So short term, the resistance is pretty strong, and if we look at, I suppose, the daily charts, you can see yesterday's bullish engulfing candle, but we seem to have like one day up, one day down, one day up, one day down. So if that's the case, we could get a little bit of an opportunity today to sell around these levels. The stop very tight. You could have it just above the 1950 level, looking for a swing back towards the 1915-16 support. That could be a gun-to-head trade idea. Let me just get indices up. FTSE stalled yesterday at the resistance band that we had. It's quite a wide resistance band, so apologies for that, but we do have sort of to consider the ranges that we've had over the previous few weeks and months, and these ranges are pretty ginormous overall. Yesterday's candle was a bearish engulfing candle, almost a bearish outside candle. I suppose the tail of yesterday's candle, if it was a bit lower, I would call that a bit, well, let's call it a bearish outside candle anyway. The body is completely engulfing that body, and we've had a sort of significant high yesterday. We got up to 75.22 before sellers came in. This morning we've got off to a more positive start. So, and again, that's probably on the back of the oil components within the FTSE that are looking pretty healthy. The DAX, how's the DAX doing? Oh, it's all gone a little bit grey. Let's get a little bit of an update. Come on, DAX, you can do it. Yeah, there you go. DAX yesterday, this bearish outside candle was a bit more significant. We've had the rally higher. That looks to have stalled at 14,000, just below 14,400, and starting to pair the gains this morning. So really could watch that a break below 14,190, and we could really start to accelerate lower. There'll be some support at the 14,100, but that could we could sort of like see yesterday's candle as quite powerful if we do get a lower close today in the DAX. Be aware of that. Yesterday's bearish outside candle also in Dow Jones, pretty significant. And again, we're looking at a level around about 34,330, a break below there, and momentum could see this move lower quite aggressively. So that would tie in with a little bit of a shift from the risk on, risk off scenario. Let's take a look at S&P's bearish engulfing candle. Again, we've had this rally this morning. See how it gets on. Maybe a good opportunity to sell into this strength in the morning, and maybe we'll get that continuation in the afternoon. If we look at the weekly chart on S&Ps, are we forming the right shoulder here? Oh, why is that whole thing gone? There we go. Is that the right shoulder? It's not far away from the left shoulder previously, 4,550, so a little bit short of that. But on a weekly basis, it looks a little bit indecisive, and we are Thursday now. So one more day, that indecision there could lead to quite a big sell-off. I'm sort of swaying as I speak and analyze these markets real time. I'm actually sort of like thinking my gun-to-head trade is probably going to be selling indices. I could hedge it by selling gold as well, but then that would be less risky, which is a good thing, isn't it? I don't know, Joe.
Is it less risky? I guess it is in a way if you believe there is a high correlation between the two. If there's not,
no,
then
I was saying
2 trades you have to worry about.
Yeah, is being less risky a good idea? That's what I was saying. No, is it less risky?
Always a good idea, right?
Yeah, maybe. Depends on your risk appetite.
Yeah.
Okay. Yeah. So yeah, that's me done. Over to you on the FX.
Lovely, thank you, Steve. Okay, so dollar index on the front foot today, continues to consolidate as things stand at the moment. Just looking at this, eyeballing it now, potential for a bit of a pennant or flag to be forming here. Would expect that to be resolved to the upside. Still looks pretty good in my eyes. Still looking for that $100 mark at some point, and think we are pretty well set to get there. Looking at Euro US dollar, that's on the back foot today. Similar sort of pattern set up, but obviously in reverse. Maybe some sort of wedge, pennant, flag, whatever you want to call it, is taking shape here, and we've actually broken to the downside on that one. So still looking for lower prices. No sign of any major reversals or bottoms taking shape just at this moment in time. Looking at cable, that stalled into resistance yesterday at 132.70. Let's get rid of that, cluster in my chart a little bit. As you can see, into this level here, and failed, and it's on the back foot again, down by 0.33% as things stand at the moment. So one of the worst performing currencies around at the moment. Still looking for lower prices, down towards this 50% fib line at 128.46. If we take a look at some of the riskier currencies today, just to see what they're doing, bit of a pullback on Aussie CAD following a strong move to the upside, maybe into some resistance here. Aussie US dollar is on the back foot today, but again, just looks to be a little bit of a pullback following a pretty strong move. We'll keep an eye on this candle. If it does end up being an engulfing candle on the daily chart, then that may signify there is a short-term pullback looming on that one following the strength that we've seen of late. Looking at some of the Swiss franc currencies, because we had the Swiss National Banks this morning, we've seen a bit of strength against the euro, up by 0.3%, but overall still looks like it is on the back foot, and lower prices will be seen here. If we take a look at some of the yen currencies, because obviously we've seen dramatic losses in the Japanese yen. This is the dollar versus the yen, really strong move to the upside since this breakout from 116.35. And as a technician or a technical analyst, when you're looking to trade breakouts, I mean, they don't get much better than that. If you'd bought on the break of that and you were still holding, you'd be looking in pretty good shape right now, and it doesn't show any real signs of slowing. I don't know what's going to turn that. Maybe at some point participants will realize it's probably a little bit overdone, and also you've got to be wary of maybe some intervention from the central bank at some point if things continue to get out of hand on the Japanese yen. So that is something to be aware of. New Zealand dollar versus the US dollar. This is one I like the look of yesterday. From what I can see in the daily chart here, it looks like we've got quite a nice looking inverse head and shoulders that's formed here. We broke above the neckline on the 22nd of March, just a couple of days ago. We stalled a little bit yesterday, but we're on the back foot today. Maybe this is the retest of the neckline, and that will maybe attract some buying interest. So that looks quite interesting for me. And potentially an opportunity to look at that for my gun to the head trade today. The trade I did yesterday was Aussie dollar versus Japanese yen. And I was interested in this blue line here because we had to go all the way back to 2017 for why that was a relevant level, as you can see here from September 2017. When we were on the video yesterday, we were posting a candle that looked to be a bit of a doji at the time because it was sort of stalling into this level. But yesterday we saw a nice clean break above that level, and there is no signs of that slowing. Yet again, further evidence of a weaker yen. So we're stopped out on that one, sadly. But we live to fight another day, Steve. Yesterday, both our trades were stopped out. You went short of gold. So yeah, we had 2 losses yesterday, but overall we've been doing pretty good recently. So we can stomach that, and we can move on to a new trade today. So you've already indicated you might be interested in looking at some indices. Is that where you're heading?
Yeah, it's. I was just taking a look at really what our analysts were looking at as well, just to sort of like see if it marries up with what I was thinking. On the DAX today, we're looking at selling around about 14,514, around about that resistance high. Obviously, we're trading at a lot lower. It's moved a lot lower, and with the volatility now, we've got a gun to a head. We've got to sort of like say we're doing it now. So it's sort of put me off a little bit. If we look at the news sentiment on DAX, you can see that news sentiment it is sort of like, looks like it's topping. Although over the last 24 hours, it's moved a little bit more positive. So this is where we're getting the mix thrown into it. And on the 7-day EMA of the news sentiment, it's actually moving lower, and it remains negative, and price has moved down. And this feels, again, a little bit toppy to me. we find that the confidence ratings on the sell trade ideas are higher than the buy trade ideas. So again, that sort of makes me think, should I be fading it? I'm waffling a little bit because it just feels like it does look a bit toppy. I could get away with a sort of like, risk is pretty high. Yeah, let's go for this. I'm going to sell DAX. Prefer to sell it higher, obviously, but gone to heads. We've got to make a decision now. Getting short here. I'll have a 100 tick stop on the DAX and looking for a 300 tick profit down to these sort of like support levels that we should see. So that's me. I'm getting short of DAX. That's what I've gone for it, Joe.
Good, like that. Yeah, I mean, looking at that thing you had on the chart you had on the news sentiment, you could see that the price was flattening off just by looking at a simple line chart. And obviously when we look at the candles, we can see that there's that big range. It looks as though it could be making a fresh low there, but
yeah,
and as you said, the price, the sentiment is also starting to roll over as well.
Yeah, exactly. Yeah, so and it sort of feels like it. I mean, gold sort of like kicked up a bit. Is there a little bit of sort of risk off coming? Maybe.
I think so. I mean, we obviously saw the big jolt lower, but I think what we're seeing now is maybe a bit of a bull trap, maybe.
Yeah. Well, just look at the daily charts from yesterday. All the indices didn't really perform well on a daily basis, so it feels like that might be the right thing to do to sort of like a little bit of an opportunity, a little bit of a rally higher. Fade into it. As I say, I'd rather do it a little bit higher than these levels, looking up towards the 14,500, which we're looking at on an intraday basis through our analysts anyway. That would be a much better risk reward trade, in my opinion. But will we get there? Yeah, I mean, I would if I had a choice, I would hold out and wait, but I haven't. I've got a gun to the head, so I'm going for it.
Okay, good. Okay, I'm going to take a look at sterling Swiss. So we've just had the central bank out from Swiss National Bank, and they kept rates on hold as expected. But I'm just looking at sterling versus the Swiss franc, and what I can see on the daily chart here is a big range. But more importantly, some rejections into this kind of level here at 124.15. And yesterday we posted a bearish outside candle on the daily chart, which for me is obviously bearish, and I would expect there to be lower prices as a result of that. So we've seen a bit of a bounce back today, but that's also been rejected. If I take a look at it from the intraday basis, I mean, I've got a sell level up here to try and get short, but I think it may go without me. So just looking at the hourly candles, we can see a little bit of a push higher here, posted a close below the 10 period moving average here. So I'm going to sell it in anticipation of lower prices. So above the highs of the day for a stop at 123.28. Current price is 122.90. So we've got key lows down here from the 21st of March. That doesn't give me enough on the risk reward situation. So I'm going to target the lower end of the range actually, which comes in at 121.17. So 4.5R I'm looking for on that one today.
Nice one.
Bit ambitious, but you've got to be in it to win it.
Are our dogs talking to each other? I've got
one
my
dog's
going here,
nuts out there.
and mine's going nuts here, and yours going nuts there. Maybe they're talking to each other, Joe.
Maybe. So
on
what
a
are these
different
two
frequency.
idiots waffling on about? Can you understand what they're saying?
Exactly.
Okay, there's two trades for you today then. And in terms of market moving data today, we've got UK PMI at 9:30, so only got 20 minutes to wait for that. At 12:30 UK time, we've got the initial jobless claims number out from the US. At 1:45, we've got the US PMI index. And that is it for today. Tomorrow morning, bright and early, we've got UK retail sales. So a few bits on the calendar today to keep us interested. And yeah, I think that's pretty much it from us, Steve.
Nice one, mate. I'm just going to take a big stick and beat my dog severely with it. Only joking. Animal lovers all over there.
Name, Kurt.
Yeah, I know. Anyway, yeah, no, nothing to add. Be careful out there. Good luck trading.
Cool. Have a good day, everyone.
Cheers.
Bye.